going on, chat? Long awaited here. We're DeFi Recode episode 4. We've got Josh Kruger on from On-Chain Alpha. Sorry if I mispronounced your last name there. This is going to be a really good one. I'm excited to talk to Josh and everything he's been going on. We've been hanging out in a private Telegram group for a while, and the knowledge he's dropped in there has been amazing. So I'll let him kind of introduce himself first, his background, and how he got into crypto, and we'll kind of go from there.
Yeah. Well, what's up? Thanks for having me on. I've never been on a podcast, so it's pretty cool. Yeah, so I got into crypto in 2015, 16 in college by incident. We put a mining rig on campus, mined Ethereum for a while, and that did really well. But that got me into Ethereum, which then got me into Bitcoin, which as a computer science background, I then got into algo trading. So I tried to do algorithmic market making for a couple of years. Started a hedge fund and did that, and we rode that through the 2017 bull market. And then things went quiet for a bit. I did a bunch of other businesses, and now we're spinning up another hedge fund that specifically focused on DeFi, kind of leverages my and my other partners' experience in the space and just the time we've been here and the raw knowledge. And we're doing a lot of DeFi farming, a lot of trading, discretionary, pretty much most of the stuff across the board currently.
And how did you guys transition from like Bitcoin mining like into DeFi? Like, what made you make the leap when a lot of people were pretty just like Bitcoin, Bitcoin, Bitcoin over the past 3 years?
Yeah, well, it's I think I think it has to do with how we got into the space, because a lot of it, I'm really interested in trading and markets in general. My partner is as well, and so we kind of just follow the market, and the market's kind of told us where to go, and we held Bitcoin for a bunch of years. Of course, we still do. But then, DeFi heated up, and these projects were doing, Bitcoin level returns in the course of a couple of months. So, or Bitcoin, 10x, 100x gains in a couple of months. So it's, the market just spoke to us and looked at it and said, oh, these are actually really cool products. They got cash flows, they have good roadmaps, the teams are incredible. There's opportunity here. And then also, we saw the yields on US dollars pop up, which, anyone who's kind of in finance says, oh, I can't get that in a bank, or I can't get that in the traditional finance system. So, and then that just one thing led to the next. And it's, I think it's a compelling product to offer investors, especially someone who hasn't been in the space a long time. Like, you try to ask, someone who doesn't know anything about crypto to fund an ETH wallet and, go farm, it's just not going to happen, and they're going to miss the whole wave. So we're kind of helping people out like that too.
Absolutely, yeah, that makes a lot of sense. People hit me up every day, and it's like it's so complicated. They're like, I don't even want to go that far or spend all that time. I'll just like buy Ethereum.
Yeah, well, that's not a bad plan, but you just gotta, you gotta know yourself and know you're not gonna buy the top and sell the bottom. It takes conviction not to do that.
Absolutely, and I've found like getting into just a lot of the talk you've said in the Telegram and stuff, like you've been right on point with a lot of the things that you put up in your Medium articles. Like, what do you think in your just like 30,000 foot view of like what happened yesterday and where we're at? You know what I mean?
Mm-hmm. Well, still kind of unraveling what happened yesterday, but I think it was definitely a liquidation event. So there was open interest got nuked across all the perps exchanges, and it was just cascading liquidations for 2 days. I think after, there was huge on-chain activity coming onto exchanges to sell. So some whales took profit, nuked it down quite a bit, and then once it broke 40K or the 42K range, I think everyone had their stops there, and there was so much open interest and leverage built up from that spot. I think that was right about where Elon did the whole Tesla thing, and then it went into full cascade mode on-chain lending. Everyone got liquidated. It was just cascading liquidations all the way down. I think even on something like Venus on Binance, they had they got kind of hacked essentially, and that went into full limp mode and went underwater. So I think it just, in addition to the perps getting liquidated, on-chain protocols in a bunch of places either went underwater, got hacked, or just had rolling liquidations into the rather thin pools for the tokens. So it just ate all the liquidity down.
Yeah, and you just saw that massive cascade, and then you just think we just take the stairs back up. Now that's what everybody talks about when it's like stairs up, elevator down when it comes to
Mhm.
trading.
Yeah, well, I don't know. There's a debate, I think, and I'm still kind of on the fence about whether or not the bull market's over or not. And I think how it bounces here for over the next week to couple months will determine what people think as a narrative. Like, I don't know that the Bitcoin crypto narrative has been cut so deeply that it won't heal, but I guess we'll see that in price action over the next couple months. I think we'll probably range through the summer, get momentum, and then kind of gather the froth to make another run at it. That'd be the bull case. The bear case is, institutions and whoever's buying in big quantity says, "Oh, that was too scary. I can't get involved with that again," and then inflows dry up. So kind of could go both ways. I lean towards just an equilibrium for a couple months here through the summer at least.
Yeah, hopefully we just like chop around and level off and like kind of just get a lot of people, to get things changing hands at higher prices for a bit.
Yeah, yeah. I hope. I'm watching for signs for like a big accumulation, and there's been some. Someone pulled off 40,000 BTC a couple like 20 hours ago. So that's somebody big buying, which is a good sign. I want to hopefully we keep seeing that down here, and we can get get back above 40K and reclaim that level like on the weekly, and then just range from here. That'd be really healthy if it did that. Healthier than it is now.
Yeah, so getting into stuff like that and on-chain alpha, like in all the data you bring in, like what are the things that you look at and on-chain alpha looks at when investing like that? Is it fundamentals? Is it a combination of that with technicals? Do you really, lean on the charts a lot? How does that come into play with you guys?
Mhm. So I trade differently than my partner. My partner trades more based on kind of fundamentals slash the team slash all that kind of stuff, and does a really good job at it. I lean kind of on sentiment, and I'm kind of more on the trading side of things, and so it's more about sentiment, narrative, and momentum. And so I look at markers of that. So on-chain exchange inflows, um, average cost of coins, that kind of stuff. A lot of like crypto quant metrics are really useful, sentiment metrics, and then a lot of technical analysis just as a proxy for kind of getting a gauge of where people's heads are at. And I find that to be very reliable.
Yeah, like and where like do you do a lot of digging when it comes to like Etherscan and transactions and stuff? Like digging like where do you see where can like a common person like a viewer possibly watching this podcast dig into some of that information if they wanted to? Where are the best places for somebody to
Uh,
maybe look at some of that?
so for charts, I would recommend TradingView, obviously, and you can make a bunch of custom indexes and stuff in there. And actually, I'm building an app right now that does like custom indexes. If you wanted to roll like all the DeFi coins into one line and compare that against ETH, and so we can watch flows. I'm not I'm not there. It's almost done. The dev's working on it. And then Crypto Quant's great for on-chain metrics. I've used them for a while, and they seem really reliable. And they didn't have that issue a while back where they mislabeled wallets. And then Sentiment's good for just sentiment and/or just like kind of quantitative market research. Those are the kind of the most reliable places that I've found. But really, it's all about like rolling them all up into one view. Like no one of them is going to give you too much. It's kind of a case of 1 + 1 = 3.
That makes a lot of sense.
Yeah,
And
yeah,
like I love the Medium articles that I've been reading from
yeah.
yourself, and I feel like I've been like learning. Like I've read your articles, and then as I'm like learning about, I'm kind of getting into this farming myself recently, and like everything's coming true that I'm reading, which is kind of funny. So I wanted to
Mhm.
bring up your article on like the mechanics of DeFi and yield farming and like the eventual blowout, and kind of like let you speak on that to the chat and explain that medium a little bit in that article, and I'm gonna
Sure,
link it as well in the chat.
sure. Let me pull it up so I can make sure I talk to the stages.
Yeah.
Um, I wrote this article because it was kind of bouncing around my head for a while, and um, I like finance and finance history. And I don't know if you guys know or you've heard of the Alchemy of Finance book by George Soros. And he kind of talks about how finance is alchemy to a lot of people, and that it, for in their minds, it can transmit, metal to gold kind of thing. And having gone through 2017, it was ICOs were the metal to gold, right? Um, and in my opinion, DeFi farming is the gold this time, and for various reasons, I guess. And I guess I'll kind of go into the steps of it. So I guess to understand why that would be the case, you have to look at how Uniswap v2 and linear AMMs work. And so it's a X times Y equals K market maker. So you have equal liquidity on either side. And what that means is for sellers, it means there's always a buyer at every price. There's never a point where, like in a normal market on an order book, a market maker tries to predict the future and move liquidity accordingly. And in a linear market maker like this, there's always a buyer at every price. And so you can have a project that says, I'm going to dump coins every day all year, and that liquidity pool is going to sit there and provide a buyer all year. There's no way for anybody to game that. There's no sophistication level you can have where you can say, hey, well, I know dumping is coming, so I'm going to move my bids down. It just doesn't happen. And so because of that, what projects have done is they'll give away their initial tokens to maybe some of the users of the project. Or there'll be like an ICO kind of round or something like that. Those people will then be incentivized to put that in a pool. Like I think in my article, just for fun, I used turd as the ticker of the project, the example project. But it's a turd/F. And so you're incentivized to put it in there, and the rewards you get are in turd. And by doing that, when that pool is illiquid and the APY in that pool is say 5,000%, you have to then go buy either anyone after you has to go to that pool, buy turd, and then stake it in that pool to get that return. And so you'll get a huge price spike as it's illiquid, and then eventually in that price appreciation, there'll then be a ton of liquidity in that pool, all earning a decent APY, but paid in that token. And so with that, the farm will then basically everybody that's your exit liquidity. Everybody's exit liquidity, and everybody's guaranteed buyer. And so then after you have a big pool of liquidity with that token, you can start up other farms. You can do single-sided farms. You can do farms of all kind, and everyone knows there'll be a buyer. And so kind of through that mechanism, the market's kind of created a way to state really high APYs and force a buyer into that. And of course, and so that's kind of the structure of modern like the farming as it is now. And I think that's what people see, and they see the crazy APYs, and it's super attractive, and it really is. I think where that gets dangerous is the fact that you're getting paid in the native token, and that pool is your only exit liquidity. And even people in the pool need to exit at some point, or probably do. And so once the token starts depreciating and people start selling into it aggressively, the APYs drop, which disincentivizes liquidity. And so just in the same way you had a slingshot and incentivized price increase, you also have kind of a race for the exit on the downside. And through that whole mechanism, it allows people to get really paper rich on really fake APYs. Well, they're real in the moment, but essentially they're just paper gains until you can hit the door.
That is so scary to hear.
Yeah, it is scary because I think most of the projects, so the alt market cap's grown so much, and then it's like, do some of these projects with $1 billion market cap and one Uniswap pool really have that? Like, is that a real market cap? And should I really trust that? And it's, for a lot of them, the answer is definitely not. Like the product of that project is the farm itself. And there'll be a point where there'll be a race to the door, just like there was in ICOs, but in this time, the market's found a way to draw it out over time in the form of an APY instead of just a normal kind of, you buy on an exchange and it goes up in price, if that makes sense.
That does make sense. And like, I can see the farms I'm in, like, I feel the selling pressure of, even if you want to roll over and stay in the project, when you're paid in the native token, you don't want to just keep matching with Ethereum to put in the liquidity pool. So you sell half of your rewards, and that causes the selling pressure every time somebody's compounding. And a lot of these big farmers that got into the project early are rolling over large amounts of funds at this point, you know. So I feel like that causes a lot of the selling pressure that people don't understand when they just want to hop in the native token instead of farming it.
Yeah, I mean the I mean, if you look at the chart for most all projects that have farms, I mean, they're a big pop and then they're a burn, and they just burn, 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 and that's just people dumping into that AMM, and it's the people in that initial liquidity pool that are buying all those tokens, the turd F pool, and it's dangerous because you could be in there thinking you're making a great APY, and then the price comes down, and now you own a ton of a token you don't want. There's not a lot of exit liquidity, and the APY is not there anymore. And so that's the kind of not rug pull, but that's the game the market's created, and it's the game that I think people that are sophisticated should not get caught believing that they can get out of later. So essentially, in my view, you have to sell the rewards now and have to get the gain in cash, because there's a high probability that that liquidity pool, if it's not a legit project and the farm itself is the product, that will dry up and you won't have extra liquidity. So you'll just have been paper rich for a while, but never ever realized it. So that's the trap.
No, that makes complete sense. Do you take like another point of view? Are there any projects you see that do have like a product market fit for something in the future, and this type of farming, you know, reward distribution, it fits at all? Like, are there projects? Is this like a warning to basically watch out for the pump and dump farm onlys, or is this like you have to be very careful with all the farming going on?
Well, there's obviously projects like Uniswap and SushiSwap and those kind of things where, yeah, they're great projects. They have great teams. They're really growing a real suite of products in DeFi that are like you'd really want to own them long term. They have real cash flows and stuff. So those are like tier one blue chips. And I would say I'm still hesitant to participate in the pools for them just because of impermanent loss and the way those market makers work. But those are projects you could actually own long term. So if the price goes down a lot and your AMM, let's say the price goes down 50%, and you're in that AMM and now you've bought 50% more of that token because of the way it works, that's okay, right? You could leave that pool and say, I'm okay owning a lot more of this token. But in other projects where you bought it just for the APY and you bought it just for the return, you don't want to be caught holding a massive bag at the bottom of something you only were there for the APY because, you know, you duped yourself into buying something you didn't want in math. Like you know, that's not good.
Absolutely, it makes complete sense. Explain, just for people that don't know, what impermanent loss is. And I've been learning. I read about it. Now I've been feeling it firsthand with, like, let's say Matic to ETH. I had a pool of. Explain what impermanent loss is, just a quick.
Yeah. So in an AMM, your liquidity is linearly distributed along a price curve, and people are buying and selling across that, and the liquidity is getting eaten on both sides of this. If the price were to come down, let's say 5%, you essentially are buying more of that token. And then let's say it goes up 5%, you're now selling that token. And so while you may have bought more than sold it, if the price then continues to rise, you sold what you bought. And so you have net lost money relative to if you had just bought both and held them. So there's very few, because the way X times Y equals K market makers work, there's very few pools where you actually get to make money net or without the yield farming. So you have to be very cautious joining any of them, because on the whole, you'd lose money in them relative to just holding both assets.
Yeah, I've learned that with, like, I have a token Matic that has gone through the roof, and I'm happy I bought it, but I put it in the V2 AMM,
Mm-hmm.
and as it's gone parabolic, it's just chewed through all my Matic and turned it into ETH. Not all of it, but I mean a good chunk, to the point where I was like, I was getting great fees. It was also my number one fee generating thing. But if I
Mm-hmm.
would have just held the asset I originally bought, I would have been much higher than I was being in the AMM. So I removed my liquidity from the AMM and just kind of let it ride from there. But I guess that was, that was one of those, I have to learn it, do it to learn it.
Yeah, yeah. I mean, yeah, it's kind of how it goes. You'll definitely, in the case where the two assets are not correlated, you in one moves very independently of the other. You're just going to get chopped up pretty badly in those. So like if you have two fundamental views and the yield farming rewards aren't there, it's actually just better not to be in that pool.
Right. You want to look for things that are going to pretty much move correlated, and then you're just collecting the fees, right?
Yeah, basically. Or if you can find one that has two tokens you have that you like, and that also has a yield farm associated with it, where you can sell that reward continuously for some kind of APY that's, above and beyond the impermanent loss, which you kind of have to calculate that for the pool. Then that would also be advantageous as well. And that's what a lot of these projects do, is they make a Uniswap pool, then you park your LP tokens, and those LP tokens earn you tokens. So the project gets to say they have a huge TVL, and you get to get some tokens.
Gosh, makes a lot of sense. It's also so scary now. Like I'm just like rethinking my whole strategy now, rethinking my life.
Yeah, well, I didn't mean to scare everybody by writing it, but I think, people need to be aware. Well, someone who's really big and not just playing around needs to be aware of the Ponzi nature of what's being made in some of these projects, because nobody wants to get in here and lose everything, by doing this. And I don't know. There's some projects where, yeah, you want to own the token and it's perfectly fine. But by and large, a lot of the long tail of projects, you could lose everything almost in these pools. So, and you also would be like, if you had ETH in a shitcoin, if the shitcoin just drops to almost zero, you don't have any ETH anymore. So that's a situation nobody wants to find themselves in.
Yeah, you don't want to be holding the bag at the end of all of it.
Yeah, and that's what everybody needs to be careful of with the farming.
Absolutely. And kind of going into the next one with the like we kind of touched on it there with your next article on the Uniswap V3 and
Mhm.
compatibility with V2 farmers. Like I'm noticing that a lot myself. Like after reading this article and like checking on my positions and everything, it
Mhm.
it makes a lot of sense. It rings very true. So can you explain a little bit about what that article was about and between the V2 and V3? Yeah.
Yeah, so I kind of explained V2 in the last one, and so V3 is different in that it's like a traditional order book, except there's buckets of liquidity that kind of go down the pool, and you can place your coins in those buckets. So it kind of mimics an order book on a centralized exchange, is a little bit neutered, and it's the primary difference for people is that you can't just put your liquidity in there and let it ride. Now you've got to move your liquidity around. If you put it at $10,000 of Bitcoin and $5,000 of Bitcoin, and Bitcoin goes from 7,000 to 20,000, you sold all your Bitcoin at $10,000. You don't have any Bitcoin anymore. So then you would need to move your liquidity again so that you can continue earning fees elsewhere. And so it kind of goes from a passive market maker to pretty much an active market maker. And that's the biggest difference. It's not something, whereas V2, you could kind of just degen into it and say I'm providing liquidity. In V3,
Whoopsie.
what happened?
I was just saying whoopsie because you're basically describing me. I just
Oh
degen'd
no,
you.
I mean there's nothing wrong. Everyone's got to play with this stuff, right?
Yeah.
But in V3, if you just degen into it and you set some like random ass numbers on there, you know, the capability, there's more capability to lose money in there and get chopped up. And so if you're sophisticated, you can make a lot more money. And if you're unsophisticated, um, you really shouldn't probably be providing liquidity. You should have someone else doing it for you, basically.
Makes a lot of sense. And like for people that don't know, like in traditional markets versus like, automated market making, like what are the benefits of like order book, trading versus, the automated market making style that you see in crypto?
I think most of it's just efficiency. So like in traditional order books, a market maker will place money on the bid-ask spread, and they want to make money from crossing that spread and earning fees and sometimes rebates from both sides. Um, and it's unique from this in that market maker thinks and tries to predict the future and places their liquidity accordingly. So if they think that someone's about to dump tokens, they'll remove their bid liquidity or place it lower. And so that, because they don't want to be the sucker in the transaction, right? If they know something's going to happen, bad's going to happen, they pull it out and move it lower and buy cheaper. That predictive capability of a normal order book would not necessarily allow the same kind of like gross dumping that you get in farming, because in a lot of these projects, we'll use Ellipsis for example. you know, it was 5,000% APY or whatever for a while. And we were all dumping those tokens into the main pool. If that were on a centralized exchange, the market makers would not sit there and bid for that stuff. They would move it way lower. So the price would go up and then it would just tank. But in the AMMs, like a Uniswap V2, you know, the sucker in the pool bought the entire amount. So that's kind of the difference in dynamics there.
And like, so I guess people like to tie it all together, and I guess this would be my hope in these farms. Then, just trying to bring a positive side to some projects that I hope I hope last. But like, I guess
Mhm.
the point is if they build a good enough project, buyers come in, APY comes down, and you kind of equilibrium out eventually as the APY comes down and new buyers come to the project. Would
Mhm.
hopefully cause a floor for some of these for.
Mhm.
That would be the goal there, I assume.
Yeah,
Okay.
well, a good project should have some kind of fundamental buying pressure on the token that is built into the protocol. Whereas the kind of the scam farms I'm talking about here, or maybe the poorly designed ones, the reason you buy the token is to farm the token. So, absent of the token having a high price and or going up in value and or making you money, there's no reason to have that token, and there's no reason for anyone else to buy it either. So that's the difference there, I think.
Understood. And then like basically being a there's no real there's no real reason for somebody like myself to be in Uniswap V2 because it sounds like I'm going to get chopped up by smarter, more liquid investors that can move around my liquidity that's passive, and I'll get eat up with all the bad side of every order basically.
Yeah, in V3 that'd be the case. Yeah. So the the sophisticated, so it's not quite there yet. I think there's the MEV bots and those developers are still making this stuff. But like in traditional markets, market making is extremely competitive. And Citadel and those companies they make billions of dollars doing this, and this is kind of their domain, the quant domain. And if you were to just put money on the order book, you've got somebody who is going to dance around you and integrate you into their strategy as a way to, and they're going to make money from you. So um, if you're passive and someone else is actively predicting the future, and they're good at it, you become yield for that person. And so I'm very skeptical that any kind of passive strategies inside a V3 pool will, in the long run, outdo the MEV slash like really sophisticated high frequency market makers that are doing like jumping your order in the mempool with MEV and all kinds of stuff like that. I just don't think someone passive can beat that.
It makes a lot of sense. And are like V2 pools and V3 pools, are they all mixed liquidity? Or are they separate pools? Like if you're buying on V3, you're in a V3 pool, and if you're buying on V2, you're in a V2, or is that all mixed liquidity?
They're completely separate, different
They are.
protocols and different pools of money. Yeah, they're different smart contracts, so they'd be totally different.
So basically, is there even any reason to have any of my liquidity in V2? Like nobody's even using those pools anymore. I'm assuming it'd be dropping.
Well, I think net volume in the space is going up in general, so it's hard to see. I think if you were to look at like maybe the derivative of it, and maybe velocity is slowing down in the V2 pools, but it hasn't quite tapered off over the top yet. Um, but I think, in my opinion, the only reason you want to be in one of those pools is if you're farming super high APYs in excess of the permanent loss. And other than that, you're better off just holding the two tokens and yeah.
Chesapeake had a really good question in the chat. What are the main things to look for to tell the difference between coins that will end up just transferring wealth from many to a few from those that have a true story of value that will stand up over time? I guess
Um,
go
so
ahead.
I mean, basically, is it a real project? Do they
Yeah.
have a real product that's, I think all of us are kind of here for like this promise of like an open, decentralized future, and that the plumbing of the new financial system is being built, and we're all getting to participate and own the tokens and essentially equity in these projects that have dividends. And so if you think that project's legitimately in the running for that, then I think that'd be something you want to own. Um, and if you're just there to make the yield and the project exists solely to give you yield from itself, from its own token, I would say it's probably a bad place to be long term, especially the opportunity cost of not owning the good ones.
I try to tell that to friends all the time, and I think I hopefully got a few of them to get out of Doge when I was like, yeah, you're like making money in Doge, but like you're also missing the opportunity to get into Ethereum and all this actual real stuff. And it took forever to convince a few people to like make the leap, but it felt good when a few friends like during the dip yesterday were like, thank you so much. So
Yeah.
that what do you think about like people like myself that are passive that want to be involved in like, you know, these yield farming and liquidity pooling and stuff like that? Like what's the best way for someone to be passively involved in any of this? Is there a way to do it or
Well, I think some of the yield farms you can still be passively involved in and make great money. Like for example, Matic is kind of coming up in TVL really quick, and so the projects on Matic right now that you can get into will, at the current TVL growth rate, those projects can 5 to 10x in the next couple months. And so I would say where you position and what farms you take at what stage in their life cycle is really the important part. So like you want to be on Matic right now, probably, and you want to be in the Matic farms early that you think will get a lot of TVL growth. And you want to get those tokens early so you can be in that first tranche of token owners in a farm. So I think it's really a timing thing and a positioning thing. So like Adamant on Matic, it's only got like 40 million TVL, and it like you park your LP tokens in there, but it auto compounds it a couple times a day. And so the APYs on stables are, 100+%. Obviously, it's partially paid in their token, so you got to take that with somewhat of a grain of salt. But you're partially also playing it because you believe that other people are going to soon be in those pools, right? And that the token will appreciate and your reward token will appreciate. So I say if you want to participate, you want to be early. You don't want to be the last guy in the dumping.
you don't want to be the last guy on V2? Good to know. I'm screwed.
You're not screwed. You're not screwed. It's like I think I'm in V2 pools on Matic right now, and they're just the farm awards are in a way in excess of the permanent loss, so it's worth it.
Absolutely. And like you were one of the first people to bring up, like the hack or anything that pops up, live. Like where do you find information on what's going on? Twitter? Like how did you find out about the hack yesterday and some of the information you popped up so incredibly quick? I mean, you're the first person to come up in any of my feeds with any of that info. So like how do you keep yourself up to date on
Well,
what's
that
going on?
actually credit goes to my partner on that one. He is a big data guy, and so he like watches the data on projects and market caps and that kind of data very very closely. And so it popped on his radar. I think because it had dropped 95% in a snap, and just our nature of our fund, that's something that there may be opportunity there really quick. So we quickly look at it. And it hadn't hit Twitter yet, so that was good. There was still opportunity there. So I'd say in general, though, outside of him, being early on the data, just from the data side of things, Twitter is indispensable. Like the speed at which things can travel through Twitter is unbelievable. Sometimes you get news seconds to minutes after it has occurred, and there's a lot of alpha on there, a lot.
Absolutely. And what are your thoughts on different layer ones like BNB, Ethereum, all the other layer ones, Cardano, I'll love to mention because I came up on Cardano.
Like in terms of like their like
Just use
scalability or what?
case, yeah, use case scalability. Like, do you think it? What are your thoughts on BNB? Do you think like are you an ETH maximalist? Are you agnostic? May the best man win. How do you view all of that?
I think my personal opinion is that ETH is still like the innovation still probably happens on ETH, and the big funding and like I would say like early funding for these smart contracts platforms and stuff happens on ETH. And I think BSC, Matic, and all those chains kind of operate as side chains at the moment. Like it's if you can't afford to play around on Ethereum, you go to BSC and Matic. Because Ethereum's gotten so incredibly expensive that you need to be moving $1 million+ for it to make sense to do anything. And that's not even considering your compounding, your APYs and stuff. So in terms of BSC, I think Binance has proven over and over again that they jump on every trend and they do it so. I don't think they don't necessarily do it better than Ethereum or anything, but they jump on the trends so early and they execute to such a degree, not to mention they have the millions of users they just push onto their platforms that I wouldn't be bearish on BNB long term just because they're so aggressive in staying up to date. You know, that everything that's come out in DeFi and everything, they've been on it within weeks. And it shows in the appreciation of BNB.
That's
And then Matt,
that's
sorry.
that's refreshing to hear. You know, I hear a lot of the other side, and I have a lot of friends that are on BNB stuff, and I've been scared to get into it. So that's that's a good
Yeah,
point to make.
yeah, I would think BNB's, you know, they're just solid. They're fast movers. But I will say, I saw some stuff and Thomas posted in the DeFi chat about the nodes being pushed to like their absolute limit right now. I think it's like a forked Geth client, but then it's like turned up to like a 10x the speed. And people are saying there's like 5 orphan blocks per block and stuff right now, and the nodes can't keep up. So that's definitely something to watch in terms of like maybe potentially bearish news on BNB, where you'll be able to pick up at a fearful place sometime soon.
Do you think like decentralization is extremely important to the end user in the long run, or do you think a lot of people end up on, you know, layer twos and that's all left to like larger players and aggregation of transactions to the layer one?
Um, I think it's definitely important. I think the whole apparatus of DeFi, in a way, is like a regulatory side skirt. Like none of this stuff could ever exist in the real world. You could never package products like this and sell securities to people like this. And so in a way, the decentralization allows the whole thing to skirt the laws of whatever country they're in. And so, yeah, it's important to the DeFi ecosystem, I think, because it's critical to people being able to experiment and do all of the kind of DeFi activities. Um, I don't know that I don't think any main chain long term will have the scalability to kind of take where this is going. And so it'll definitely be a stack solution where like there'll be a layer 2 unsharded F or on F shards and stuff like that. I think if the promise is real of DeFi and then decentralization in general, then in that whole like thing grows out where we got social media, we got banking apps, we got, you know, all those things, then it has to be multiple layered, in my opinion.
That makes a lot of sense. Any like crazy alpha you want to drop? Any projects you're interested in looking at that you can share with the community? Anything that's like really piqued your interest lately?
Lately, Adamant on Matic has been piquing my interest. Dev is just extremely talented. He's cranking out updates faster than I've seen most projects do. They got a bunch of vaults doing, you know, 100+% APY if you're just in stables, which is, you know, that's the best you're going to get pretty much. And then I think he's got a lockup on the token, so it can't. The dumping dynamic of traditional farms, there's a little bit of game theory there, but it can't dump as hard as other tokens do because of that. So I would say there's definitely some alpha in that one, and if someone else wants to look at that, that'd be probably a good idea. But basically, all the Matic apps, all the Matic DeFi primitives are be where you want to be right now.
That's good to know. I haven't really, I like, you know, I hold Matic, but I haven't, like, I've just been lazy on switching everything over and just kind of really like diving in to what's over there. So that's good to know. Was it hard to, I mean, I'm assuming it's pretty easy to bridge, you know, your Ethereum assets over and all that.
Yeah, on Ethereum, Matic's got a native bridge, and then on BSC, you can use the X-Pollinate bridge, and that'll take you over there in stables. So both of those work great.
Oh wow, you can connect Matic to BSC and Ethereum, so you can do both like project type things on Matic.
Yeah, they're all EVM compatible, so they all can run F code. So projects can be ported over to, and I think even Curb's on Matic too. So
So on Matic, I would have access to both, you know, Ethereum DeFi deals and BSC DeFi deals, and I wouldn't have to worry about.
and no, you just still have to bridge the chains back and forth if you wanted to go back to their chains, but you can freely go between them.
Ah, that's interesting. I
It
didn't know
uses
that.
different ETH address. So your MetaMask will just plug right in. You'll put in a different RPC node, and it'll be off to the races.
Makes a lot of sense. I didn't know that. I need to play around with it. I've been I've been lazy, I feel like.
Yeah. I would say for anyone who really watch where the TVL is going, and I think there's a lot of alpha in that curve because if TVL is growing at 2x a week, you can only imagine what the projects that are in people that are betting on those projects and anticipating the future are going to be marking those projects up at. So
Absolutely, absolutely. That makes a lot of sense. Where can people like keep up to date with you guys on Chain Alpha? Is it the Medium? Do you have a Twitter? What's the best way to keep up with yourself and what's going on
you can
with your
follow
group?
myself on Twitter, and I can post the Twitter handle. It's like an ancient pseudo-anonymous Twitter handle. And then just my Medium, I kind of post some stuff in there if you kind of want to follow my thoughts on DeFi/V3. And then, yeah, you can just DM me on there if you want to chat.
Awesome, man. Awesome. Anything else? Any other alpha we can talk about, I guess. Questions
I,
questions from chat.
yeah, let's do that. Let's see.
Oski says, "Is that Data Dash? What's Data Dash?"
Data Dash.
Rodney says, "Ask him to shill his next 100x." I feel like he just did.
I gave you a clue where the 100x is at.
Yeah. Be like, yeah, everybody wants the easy money, you know?
Yeah, I wish I had a shield or a coin I could give you for 100x right now. That way I could make my 100x off everyone here.
Yeah. Is On-Chain
Just
Alpha,
kidding,
are
but
you guys US based? Are you doing the PR thing? How does all that work?
yeah, we're a US based hedge fund.
US based hedge fund.
Yeah, primarily kind of delta neutral focus. So we don't take a lot of directional exposure, but we do take some sometimes. So DeFi has been amazing for us.
That's amazing. Yeah. Are you going to be in Miami for the Bitcoin conference here in a couple weeks?
Yeah, you gonna be there?
Absolutely.
Nice, dude. Let's meet up. Thomas is gonna be there too, and
Yeah,
those
yeah.
guys. I was gonna.
Yeah.
Yeah, I think we should all meet up and do something. I want to meet everyone in person.
Yeah, absolutely. I think we're all gonna definitely have to meet up, grab some drinks, or do something like that. So it should be I think it's going to be an epic conference. I don't know how much you've looked into it, but it seems like with it not happening last year and the bull market we're in now, I feel like a lot's going to be going on there networking wise.
Yeah, I think it'll be fun as well. And it's my first crypto conference, so networking and meeting people and I've met so many people online over the last year now that like it's like I feel like I'm gonna get in the conference room like no you, no you, no you. um,
Absolutely. Do you hop in like where do you find where you get the most information from projects? Is it in Discords, reading mediums, like Twitter mostly?
um, so I think Twitter usually alerts me to the projects or some dashboards like DeFi Llama and stuff like that. And then typically I'll read everything they got in their Medium. And these days don't even do white papers anymore. These projects just like launch. They have Medium articles now. Um, and then I'll hit their Discord and hopefully the developer's in there because if I can talk to him and he's responsive or they responsive, that's a big boon because you can get kind of questions. You can also just ask them what they're going to release soon and maybe get a good answer there too.
Yeah, I feel like I've met a lot of really good people hanging out in the discords of a lot of these projects, and I've been able to ask a lot of questions that I've learned a lot outside of those projects, just kind of hanging around and reading what everybody else is doing in the Discord.
Yeah. What farms are you in right now?
I really love Alchemix a lot. I have
Great.
just like some basic I just wanted to test out like basic pairing of like ETH YFI, ETH Compound, ETH Maker. I figured they would
Mhm.
all kind of like the blue chips would kind of move in similar to ETH. They're not really cranking enough fees. I think I'm probably just gonna pull it all out. That ETH Matic one was doing amazing, but Matic grew so much it was best to just not even be in the farm. So I feel like my thing is kind of pulling out of there and learning more from people like yourself on like how can somebody like myself get involved with the yields there, but maybe
Mhm.
let an expert do the movement because for me to learn on it, I'm just going to waste potential gains. I feel like I'm learning quickly.
Yeah. How are you playing the Alchemix?
I just bought a bunch of ALCX and split it and put it in the farm, and I've just been farming, and like you said, actually I'm just selling the rewards and then
Mhm.
putting it in the vault to use for. I honestly think cash flow, that's going to be kind of my way for cash flow in the future. When we do go towards a bear market or something happens, I'm going to use Alchemix heavily. And then I've been using I took a max Aave loan about a month ago on some of my assets just to play around, put it in the Alchemix vault, took the
Mhm.
max loan from Alchemix and paid off half the Aave loan immediately. And yesterday was like the stress test of that. That was like the math. That was like me sweating at 7 a.m. thinking of, do I hit the collateralize button and spend $1,000 just to collateralize up? And we made it. I didn't have to collateralize, so I love that that play works. Like that was the best stress test I could have had. I went into a meeting this morning with my friends, my partners, and was like, we did it. This play might actually work for the future. So I've been liking that. I'm just gonna kind of keep cycling like the asset borrowing there into Alchemix, and then use Alchemix for cash flow in the future, whether that be to buy more assets or to cash out for bills or whatever it may be.
Yeah, that's awesome, dude. I'm glad you didn't get liquidated.
Yeah,
One of the few.
it was
Dude,
it was definitely a sweat. 7 a.m. yesterday. I was sweating bullets, that's for sure. Like the Alchemix or like Aave, I love how it's got like a set number and it turns like green to yellow to red as you get closer to liquidation. And I was definitely pushing like dark yellow, dark yellow yesterday in the morning. So
Dude, yeah, I stayed up all night, like watching all that stuff. It was stressful, but it turned out well. But it was still stressful. I mean, there's no way about it. It just feels like death the whole time.
I honestly wish, like, I look at drops like that and I wish I would have been here for years. I wish I would have had something like Alchemix where I have some, in the future I will be better situation to stay up. Like I set some alarms for Ethereum on my phone and woke up and was like, that's nice, but I didn't have any capital to fire at
Mhm.
at it. And like watching the liquidations that happened like 30 days ago or whatever, I kind of got myself ready to buy here, but I've been completely 100% allocated. So that's like part part of the Alchemix play there is to make sure in the future as that builds up, I've got capital I can fire when we see these liquidations happening, and these big wick candles down and all that stuff. I want to be able to access some stable coins and get in the game.
The guy in the chat says Brandy almost went to Home Depot to buy a robe. That's
Oh man.
serious.
Oh,
Oh my.
I was having a good time in some discords laughing yesterday, that's for sure. I was in the Alchemix. Of course, they have a Discord channel called Degenerate Yunting for like any of your gambling plays. And
Yeah.
somehow taxes came up 2 days ago, and I was like asking tax information, and I was like laughing to myself later that night, like who the hell takes any tax information seriously from a Discord channel called Degenerate Yunting with a bunch of anonymous people? Like, what am I doing with my life right now? And then yesterday happened, so I went back in the Discord and I was like, well, all that tax info we can fucking forget about. It's gone. So
That's hilarious. My God.
it's been a fun 48 hours ride for me. Like, and I'm happy the stress test passed everything, and now I'm like, all right, let's just, like you said earlier, we don't know where we're at. We might chop around here, so just let it all. I'm gonna let it all just kind of hopefully shake out for the good. I can't see a bull market being over right now with everything going on in DeFi.
Yeah, I'm kind of in the same. I'm on the fence whether or not it's over. Like I think it really depends on how well the narrative damage heals, and if people get to that like feverish point again, and how they get there. I think so. I think it'll be a couple months here. I mean, what is the trading range now? Like 50. Yeah, let's see. We got a 60% trading range from 30 to 65 to chop around in for a while, and not really, everything's okay. So
Do you think, like, now that we've kind of like blown off a little bit, does this like open the narrative a little bit for some other corporations like Apple or somebody to maybe another big buyer to kind of start stepping in, and you look like a sane person in the boardroom to start saying that now versus like trying to buy the top of the run up we were having, you know?
Yeah, I don't know. I can't tell if you're crazier now or then, you know, like it dropped 60%. And so I don't know. That's kind of what I mean. If the narrative, if it like bounces back good and it's like, oh, well, look, it dropped 60% and still recovered, you know, look how strong this asset is. Or if it's like a bunch of companies are underwater now and this CEO knows that CEO and he's like, dude, you know, Bob lost a ton of his balance sheet this month. So I don't know. I think it depends on like how it recovers and the perceived safety of it after that. I don't know.
Yeah.
I still think F has got the most upside of the two, but we'll see.
I think it's just got more product market fit. You know, just with everything in DeFi going on, like I like the narrative of like, okay, if Bitcoin is gold, it's, you know, gold's only so big, and you compare that with the traditional financial market, it seems like Ethereum has a lot of runway still.
Yeah, and then with EIP 159 and the buy-in turn, and then the the shards coming in within a year, hopefully, you know, that's a lot of positive catalysts for ETH. That actually turned it into a really good buy and hold asset, which it hasn't been up to now. So I don't know. The case for ETH just seems to get stronger and stronger just because they keep learning from the market and adapting in a way that Bitcoin hasn't been. So
yeah, absolutely, I agree. Any final thoughts? We pushed through the full hour here. We touched a lot of good stuff today. Any final thoughts you want to throw out to the people, impart people with?
I say be safe on your farming. You know, you don't get rugged. You know, you do have to watch out. Maybe not now, but at some point in the future, you're going to have to watch out. And don't be the guy that thinks I own great projects. They'll come back. You know, in the bubble chart. You know, so yeah, just watch out for that.
I definitely like the advice of, you know, you should probably be cashing out the rewards to at least get your initial investment back while the APYs are high enough, you know?
Yeah, yeah. It's the illusion of safety through having a big liquid pool, but when that disappears, man, it's going to be rough.
It's going to be a rough time.
Yeah.
Well, I appreciate you coming on, Josh, and thank you so much, and hopefully we can do this again as things progress and there's new stuff to talk about maybe after Miami and everything.
Yeah, cool, man. I'll meet you in Miami, and let's talk again soon.
Absolutely, man. Have a good one.
All right, later.
See you, brother. Thank you for watching the YouTube videos. We really appreciate it. Don't forget to hit the thumbs up button, subscribe, comment down below, help us out with YouTube algorithms, and we're live 5 days a week on Twitch, 7 a.m. to 2 p.m. EST. Come check us out. Thanks for watching.